Dr. Ewan Ashley, the Scottish scientist and now Professor of Genomics and Precision Health at Stanford, very eloquently summarised in his 2021 book, The Genome Odyssey, the staggering reduction in the cost of sequencing a human genome seen since the completion of that multi-country, multi-billion-dollar human genome project, completed now over 20 years ago, has, and I quote, fueled a tsunami of scientific discovery and given the medical profession an unparalleled opportunity to change lives for the better, and a tool to understand disease at a deeper level and to begin to personalise the practice of medicine. Today we'll discuss some of the significant leaps in innovation being made within the life science sector with Chris Hollowood, Chief Executive Officer of Syncona, an investment management company looking to unlock the potential from this innovative science. Hello and welcome to the Investor Insights podcast, hosted by Killik Co. My name is Gordon Smith, and in each episode, I'll be interviewing portfolio managers from across the investment industry to gain from their expertise in the specialist areas in which they invest, and to question them on the topical issues of today. Killik Co is an independently owned wealth manager which opened its first office in 1989 and provides services to help families save, plan and invest. And you can find more details of the unique ways in which we do that on our website, killik.com. In today's episode, we speak to Chris Hollowood, Chief Executive Officer of Syncona Investment Management. Chris transitioned from CIO to CEO at the beginning of 2023. He has over 20 years of experience within life science venture capital investing and was instrumental in the foundation and development of Syncona's gene therapy strategy. His CV at Syncona includes being chairman of both Nightstar and Gyroscope, two retinal gene therapy companies which were successfully developed by Syncona and sold in sizable transactions to large-cap biotech and pharma businesses Biogen and Novartis in 2019 and 2022 respectively. Genomics is an area of science which is having a profound impact on the delivery of healthcare, leading to it often being termed the third wave within life science research. What makes genetic therapies so significant is that they have the ability to be personalised and precisely targeted at addressing the underlying cause of a chronic disease, with the ability to treat or cure that condition by introducing or modifying defective genetic material in cells. The first human trial of a gene therapy took place back in the early 1990s, but significant advances, particularly over the last 10 to 15 years, is now showing signs of producing a step change in research productivity, with the first of now several therapies being approved in 2017. What should come across in our discussion with Chris is how Syncona, along with its association with the Wellcome Trust, is positioned at the very forefront of developing life science innovation as it is formed within UK academic institutions. Syncona is also another good example of an excellent use of the London-listed investment company structure. The closed-end fund enables the team to take the required long-term approach to investment in early-stage life science businesses, with no requirement to raise funds or be constrained by a short investment time horizon. The company's unique history, having been appointed manager on the Battle Against Cancer Investment Trust, or BACIT, back in 2016, also means the company has a significant liquid cash pool, representing around 500 million of the 1.2 billion net assets of the company. This can be used to fund new and existing businesses into the future and gives the strategy the best possible chance of maximising shareholder value from these businesses should they be able to successfully execute. This was an interesting time to speak to Chris, following what has clearly been an extremely challenging period for early-stage life science investment. This challenging market backdrop may well persist, but ultimately the success of this strategy for a long-term patient investor will be determined less by the future direction of interest rates and inflation, but more solely on the success or failure of the underlying science. And what should come across in our discussion is that this portfolio contains many highly promising companies at various stages of development. Hi, Chris. Thank you so much for joining us. How are you doing this afternoon?
Very well, thank you, Gordon.
The kind of first question we asked to kind of start these discussions attempts to get a bit of an insight into kind of what you're looking at the moment, and maybe your kind of typical working week. So I wondered if you could share are there any anecdotes you could give us from any company meetings recently, or even just a book or an article? We've had kind of book recommendations in this bit before. Anything that you can share?
Yeah, look, I think firstly, the working week is very varied around here, and that's what makes the job very interesting for me and hopefully the other people that work here. So you are everything from talking to other investors in the field, to seeing new opportunities, to meeting with your portfolio companies, to checking on them and make sure everything's working, to coming up with new ideas. So over the course of the week, we tend to make Monday very internal in our meetings. So we all sort of debrief on where we are on various projects and help each other out. And then in the middle of the week, we're normally out trying to find interesting things. And I guess one example from this week is I met the great Professor Syncona Ltd, which your listeners might not know, but he happens to be one of the leading glaucoma specialists, if not the leading glaucoma specialist in the world. For those that don't know that disease, that's a disease that can end in blindness, and it's caused by increased pressure in the eye that eventually destroys your optic nerve. And he, over the course of his career, has made a number of advancements to change the treatment of glaucoma, and through that, to change the practice in the field. That has led to millions of people's sight being saved. And it's just a wonderful privilege to meet an individual like that. And it's a wonderful privilege to have a world leader tell you about a really interesting piece of science and disease. And so that's what, sort of gets us energized around here, is we clearly need to run a business and make sure we're looking after shareholders' money. But every now and again, it all starts with a kernel of brilliance from an individual like that. And those are super exciting meetings.
Yeah, sounds like a very interesting person to speak to for sure. And Chris, I wondered, as a kind of a first proper question, and as an introduction, I wondered if we could go back and describe some of those kind of primary reasons why Syncona was set up in the first place. I thought that might kind of frame the discussion well. But could you kind of run us through the reasons that the company was set up in order to invest in and develop those that kind of significant innovation which was coming through within the life sciences at that time?
Yeah, so we were set up about 12 years ago now by the Wellcome Trust, who were the initial backers that remain the biggest shareholders in Syncona. And the Wellcome Trust, a wonderful institution here in the UK, has a foundation that generates quite a nice return. And out of that return, they grant fund a lot of basic research, a lot of clinical translation. And so have a great vantage point between investing and cutting edge technology. And they were of the view, and I think this is widely held by a lot of people in the industry, the UK science space was as good as the other great centers in the world. The quote I always give to Americans when they're coming through town is, there's only one place on earth you can be 60 miles from 4 of the top 10 life science research universities. That is actually here in London. That is not Boston. It's not San Francisco. So it gives you a sense of the high provenance of the science. But frankly, the biotech companies that have been built out of that science have been very hit and miss. And the Wellcome Trust is very frustrated by that, because, as an organization that wants to drive better outcomes in human and animal health, they saw the creation of biotech companies as an important part of taking that nascent science all the way to a product that can then be sold to the patients that need it. Number one. Number two, they looked across the pond, North America, and saw that if you do build proper biotech companies, I'll come to what I mean by that, but if you do build proper biotech companies, and they take high impact science all the way to a high impact product, and get that registered so it can be legally sold, you can make a lot of money. And clearly it's a foundation and it wants to make a lot of money because that's what fuels the charity. So that was the genesis thought for Syncona. So what do? We put high ambition around world-leading science. And historically, that's not how UK biotechs have been built. UK biotechs have been built in the, oh, we'll never raise enough money, therefore let's just do a few things with this science technology. What happens is in the UK, you might discover something that's the basis for starting a company, 12 months before it's discovered in Boston. But the Boston company will raise 10 times the capital and beat you. And so Syncona's model is to not get beaten. Where we see interesting science that supports the building of a biotech company, we build it and fund it. And I'll come back to what we mean by that, but we build it and fund it to be what we call the category leader in the space. So if you're the category leader in the space, you're the one that gets the winning valuation. So how do we do that? We go find the Penn cores of the world. We've got lots of fantastic academics across our portfolio. We sit down, we listen to their research, understand it at its first principle level. There's a huge number of PhDs, highly accomplished scientists on the team here. And then, why would a professor know what the best strategy of business plan is? That's not the world they've been brought up in. So we then devise that for them in collaboration with them. And then having got that, we build a company. And importantly, we hire a management team that has the capability to build an ambitious biotech and win. So, we're not just investors. Investing is an important component of what we do. But we are builders and aggregators of talent, with a devisers of strategy, with a spotters of high potential science. And we're a long-term partner to a management team that's building a biotech company as it goes through all of the twists and turns of development, because that is highly volatile, very difficult to do. And so we're very proud of the track record. And we've had a number of companies that built that are successful. And to show that the model works, the two most valuable companies built in less than 10 years in the UK ever are ours. So ambition around the quality of the science here really does translate to real outcomes for patients and shareholders. What we're trying to do now, having sort of the way I characterize it, is we've run the beta test and the beta test worked, is we're trying to see if we can scale it. We made a number of changes to people and processes around here by bringing in some very experienced executives to help us do that. And we're excited about the next 10 years, because what I can tell you on is over the last 10, we were never short of bumping into interesting ideas. So there's plenty more out there. There's plenty to do.
Yeah. So maybe as a kind of a follow-up to that question, kind of looking at the last 10 years and the investments which have been made by the company, and appreciate some of those have been acquired, so have left. But the portfolio that we have at the moment, I mean, there is a spread of different assets, different therapeutic areas, differing science, but there is a notable focus on cell and gene therapy innovation. This is maybe a kind of a broad question, but I wonder whether you could kind of summarize just how significant genomics is at the moment to innovation coming through, and how that's kind of guided where investments have been made.
Yeah, so so we're not a cell and gene therapy company. What we do is we back the cutting edge. The last 10 years, there was a real big kind of breakthrough in the pharmaceutical field with the introduction of new drug modalities. That's the cell and gene therapies of the world. And we were one of the first groups globally to stop that. And so we built a portfolio that had a very high level of exposure to it. The reason for that is the UK was a world leader in cell and gene therapy. If you look at the initial seminal papers, a lot of them came out from the Cancer Institute at UCL, Moorfields, which is also another UCL institute, up near Old Street, some out of Oxford. So there was a bed of science and expertise here from which we could build. And, you know, we sort of forget how dramatic it was. You know, we were seeing data sets where a patient that was going to go blind could see again, and a patient that was definitely going to die walk out of a hospital. It wasn't just this was an incremental thing. This was wow. And you know, we have continued to have a leadership position in that space and seen that sector evolve, and still have a number of cell and gene therapy companies in the portfolio. And actually, the two companies I cited earlier as the big successes are gene therapy companies. So this stuff really works, but it's not for all diseases. And so we are broader than that. And we've increasingly started to talk about the need to get the right modalities, the right drug format for a given piece of biology in a given disease. And what's interesting about the sector now is when I started doing this 20 years ago, we found an interesting piece of biology. You had two choices. One is you did a small molecule, which is a white pill that you take with a bit of water, or you did an antibody, which was an infusion in the arm. That was it. Now you find someone who's got an interesting piece of biology. You've got those two still. Then you've got gene therapy, cell therapy, gene editing, you've got RNA, you've got assays. There's just a whole plethora of modalities that mean that we can access different biology to really have impact in diseases that have to date been intractable.
Yeah, thank you. Chris, I wondered if we could go back and just explore something you mentioned earlier, that, I mean, this isn't to do with kind of simple ownership of a private stake in a life science business. I mean, you are instrumental in creating these businesses and kind of managing them through. I mean, could you maybe talk us through maybe one example of just how influential you've been in kind of developing the business and kind of how involved that is?
Yeah. So about a company we founded called Gyroscope. So this originated with a meeting with the now late Professor Sir Peter Lackman. So he was an absolute expert in a part of your immune system called the complement system. So first line of defense of the immune system is the complement system. It's the thing that blows holes in bacteria when they get in your blood. The downside of the complement system is when you get old, it can go a bit haywire, and there's a number of diseases you get, but one in particular is a disease called geographic atrophy. And in that disease, what's happening is your complement system's got haywire. Rather than blowing a hole in bacteria, blowing a hole in your retina. So you basically end up with dead cells in the retina, eventually go with central vision. You get like horrible disease, and something that desperately needed some kind of cure. So Peter had discovered a part of the complement system called complement factor I. He'd actually discovered it in the late 70s, fractionating blood in Hammersmith Hospital. And ever since the late 70s, had been convinced of its therapeutic potential. The trouble is, no one had ever been able to make it scale. And you can't fractionate blood to generate a drug that needs to be treated the way you need to treat millions of patients. It's just not viable. So given our expertise in gene therapy, after our meeting with Peter, we went back and said, we've got a solution for you. We think that you can format this as a gene therapy. You don't need to make complement factor I. What you can do is send the gene in. We can inject it directly into the back of the eye, and we can have CFI produced in situ where the disease is. And that was the genesis thought for Gyroscope. And that is an example I did because actually that was intellectual property generated by us. So we have our names on the patent, we license that into the company, then we built a company. But at the start, all we had was a legal shell that held two licenses, one from Syncona and one from Cambridge. So that doesn't go anywhere. So we now need to build it. we hired a management team, and key individuals in that was a gentleman called Karem Farouk. Karem is a British gentleman that was living in San Francisco at the time, working for Genentech, which some of your listeners will know as one of the greatest biotechs ever built. Very senior person, and he'd run their ophthalmology division. He wanted to return to the UK, so he came in as CEO. We found this individual. We weren't looking at we were looking across the world for people to do this. We found Karem, got a great relationship with him. He came in to be CEO. We wanted a world leader in dry AMD. There's a lady called Nadia Waheed at Tufts University in Boston. We convinced her to leave her academic role to come and run the medical side of the business. And then we got to Killik, and we had to build out a capital base of it. Had a very good relationship with a Dutch investment group called Forbion. So they came in alongside us to help us build the business. We then added a guy called Ian Clark, the CEO of Genentech, to the board. And then eventually it got sold to Novartis when they became very convinced about the data. So all along that path, including the Novartis transaction, so I negotiated as the principal in that transaction. So that wasn't the company that did that, Syncona did that bit of it. We're very hands-on, and we are adding value and impact in our company way beyond our capital at every stage. Most of them are devised around strategies that we built in collaboration with academic founders. So we don't see ourselves as just investors. We see ourselves as company builders, owners, and investors.
Yeah, that's pretty clear from that example. Yeah, thank you for that. So I think we've kind of laid the, maybe we could talk for a long time about some of the innovation coming through, but we can't not talk about the kind of elephant in the room being the kind of current market environment. It has been quite a challenging last couple of years for early stage biotechnology, a kind of far more difficult financing environment for both public and private companies. And you have in your kind of recent kind of commentary talked about that kind of subtle evolution of the kind of financing model. I wonder whether you could talk us through the reasons for that, but also kind of how set do you think the company is to navigate the current market from here?
Yeah, so let's start with the second part of that question first. It's been a very, very tough biotech market. It has eased somewhat this year, so it's not as tough as it was last year. And what we have in the portfolio is fundamentally very good. So we're very optimistic about financing it, getting it to data, and that data, not across everything, it's biotech, we get 100% rent from biotech, but enough of it being dramatically good that's going to drive value from here. We're well capitalized as a company, so we're in charge of that destiny right now. And we use that cap, as you know, Gordon, to crystallize financings in the market so we can bring other capital to really scale. So, we believe that we've managed our way through the downturn in biotech well and preserved a lot of value. I know our shareholders would like to see the value grow. That's absolutely what we're focused on. But it's much better to preserve the value when there's no growth available than go down in the market. So we've done that relatively well here. And we have shifted our capital strategy, as you point out. The reason for that is, if you go back to sort of my description of where we started in a world where you needed to change the startup model. And without changing the startup model, there was never going to be a crop of interesting companies for you to then deploy a lot of money into and really scale and get a return. And there weren't a lot of people that believed us back then, right? And so you had to do it all on your own. So we did the initial financing rounds in these companies as just Syncona. And I think we won the argument. I think people are now much more accepting that that is the right way to build these companies. And what that means is we can collaborate and partner more at the early stage than we could previously. And that's really good because that allows us to focus our capital where it really counts. Because to win, and we've got ambitious growth targets out there, to really win, we need to drive 3 to 5 companies all the way to approval. So we can collaborate with other people's capital at the early stage. That means we're reserving more of our capital to be able to drive the scale part of our model. And that's really where the next game is played. And if we can do that, where we would change the industry not only for the start of the industry in the UK, but actually for the scale point, which is where the country currently stutters with its biotechs, and they all end up going to the US. So that's where we're focused. It is, exciting to run a model that allows us to take that on, but it's also very rational in that if we can get that right, there's a huge amount of value to be created for our stakeholders.
Thank you for that. Chris, my next question is a bit off piece for this discussion. I mean, as you know, we can't have any discussion at the moment with anyone without talking about AI and computing power. But I mean, there clearly have been quite significant developments in kind of broader technology to do with kind of machine learning and AI. And you mentioned in your last kind of last answer about you can't expect 100% success rate in biotech. But I wondered if you had any views on how significant you think the impact of on drug discovery is through the kind of the use of AI, and whether you had any views to that regard.
Yeah. So I think it's positive. I would probably argue the impact is not going to be as great in the next 10 years as some other parts of the market are saying it will be. We deal with very complex science. And in doing that, you have to be very vigilant not to be exposed to the narrative fallacy. It makes sense, therefore it will work. And when we do our investments, we index the things that have been discovered in an unbiased way. But if you discover things in an unbiased way, that tends to be a huge experiment. So I'll give you one example of a company in our portfolio, which is a company called Forcefield. And they're developing therapies for acute myocardial infarction, everyday language heart attacks. And the founding professor there just took the view that there's been no innovation there for 30 years. No one knows what is going to have an impact. We need to run an experiment, effectively sifts through everything. And what he did is he managed to make a library or a screen of all of the proteins that circulate in your blood. So there's 1,200 of them. So he run an experiment. He said, I don't know which one of these is going to work. I've got no a priori hypothesis. I'm going to look at 1,200. And when he ran the experiment, there was 3 in particular that showed an impact in preserving heart tissue when under attack. That was 10-fold greater than anything anyone's seen before. So run a holistic look. So we like those for 2 reasons. One, holistic experiment. Secondly, there's no bias in it. It hasn't got, I believe a mechanism like this will do this. Okay. So where AI is useful is the experiments where it's not 1,200 patients. We just about do that ourselves, where it's 10,000 or it's 10,000 against 10,000. And AI can, in a very unbiased way, sit through that data and say, here's the 15 best ideas based on looking at everything. That's where I think its power is, because then, like Syncona, doesn't have to look through millions and millions of things, gets 15 really highly curated hypotheses. But then it has to pick, because what AI can't do and what no regulator is ever going to let AI do is dose an animal, dose a human. So all those steps in the drug development pathway cannot be circumvented with AI. And that is where all of the money and time is. So that's why I say it will have an impact in the way I've described, but the rest of it is just ordinary course of business. What it means for ordinary course of business is probably the risk of failure has now gone down. And that's very meaningful to cost of capital in the section of actual return. So definitely something that we are looking to incorporate increasingly in our investment thesis in our companies. But I don't think you're going to see us go, we're just an AI company that's going to solve everything.
Yeah, sure. Yeah, no, that's interesting insight. Thank you. Our standard final question is one that asks the speaker to pick their kind of highest conviction area at the minute. And I don't want to kind of push you to pick your kind of favorite baby in the portfolio, but I wondered if there was maybe one area or one element of the portfolio that you would choose as being particularly exciting at the minute? Perhaps that's got data that you're waiting on in the more near term.
Yeah, so the exactly that. I think we've always talked about having late stage companies really drive value, and we're now in a situation where we've got 3 companies at late stage, just the most we've ever had. Fortress is well known to our shareholders and obviously had a great financing event earlier this year. The other 2 are Beacon and Freeline, and 2 remarkable therapies in my view. So Beacon has a drug for a disease called X-linked retinitis pigmentosa. This is a inherited form of blindness, affects boys. If you are born with it, you'll start losing night vision in your teens. You lose all your peripheral vision through your 20s and early 30s, and eventually your central vision will go to 40, you'll be legally blind by the age of 40. Nothing can slow it down, nothing can stop it until now. And what Beacon have developed is a gene therapy that sits underneath the retina, makes the missing protein, and not only does it slow down the degeneration, it restores sight. And it's really remarkable. That company is going to be in phase 3 this year, and so very close to getting to the end stage drug approval. And to be here saying that we backed a company, built this company, and it's going to have an impact in a devastating disease like blindness feels wonderful. The other one's Freeline. Their lead program's in a disease called Gaucher disease. You've heard of lysosomal storage disorders. That's one of them. Well, lysosomal storage disorder is there's a part of your cell called a lysosome, and think of it as the trash can. So it kind of chews up all the waste in the cell and processes it. And there's a set of these diseases where one of the proteins that does the chewing up is missing. Gaucher disease, there's a protein called GBA that's missing. Freeline have been able to go through gene therapy to deliver a working copy of GBA back to patients. And we have seen some initial data where it shows a really remarkable effect in lowering disease burden and giving these patients a much better quality of life. Their data is going to get published early in May at a conference in the US, Cell and Gene Therapy Conference. We're very excited by that. That data set is positive. That company will be in phase 3 next year, and therefore will re-rate in value on the basis of that sometime in the future. So we're very excited about both of those. And there's been like the culmination of a lot of hard work to get there, not just by us, but by the teams of the companies as well.
Yeah, I know some good examples. Yeah, thank you for that. We could probably fill a couple more episodes talking to you, Chris, but thanks very much for your time. I really appreciate you talking to us today.
Thank you, Gordon. Really appreciate the opportunity.
Thank you for listening to the Investor Insights podcast. You can contact info@killik.com, referencing the podcast for more information on any of the topics discussed, or for further details on the services offered by Killik Co. This podcast is not personal advice. The content is intended for educational purposes only and is not investment research or a recommendation to buy or sell any financial instrument or product, or to adopt any investment strategy. The value of your investments can rise as well as fall, and you could get back less than you invested. Past performance is not a guide to future performance. The investments referred to in this podcast may not be suitable for all investors, and you should seek advice from a qualified investment advisor. Killik Co is authorised and regulated by the Financial Conduct Authority, the FCA.